Excellent. So speaking of when you go to sell the business, right? Massive capital gains taxes. I'm curious, what have been some of the one or two go-to strategies when it comes to exiting and having, either stock, public or private, or big business sale, S corp, C corp. What's kind of been your go-to, or do you have any thoughts on that, Stephen?
Sure. So I'm not a trust attorney, but sometimes we work with trust agreements. But honestly, Brett, I just had one of my favorite clients have a massive exit, and we worked on that deal long and hard. The last thing he was concerned about was the taxes, because as long as they're capital gains as opposed to ordinary income. But the exit was so good that sure, he's giving money back, but you have to consider, to the government, but you have to consider that in your exit. But he's thrilled. In other words, if the multiple's big enough, taxes become kind of a afterthought. There are trust instruments, but again, there are trust instruments, or taking equity at a low initial equity price point. There's ways to lower your tax burden, and certainly we want to make sure that number one, you have a good CPA from the very beginning, and number two, that our tax counsel connections are solid and can provide advice on that structure. It's one of many things you're thinking about when you're structuring the exit.